Hi, good morning. So, as it has been the case in the last 2 weeks or so, market tried to scale back some losses for the last 2 weeks yesterday. It traded for quite a bit in the positive territory, but then towards the end of the day, again, the market sank down. Uh, Day before yesterday, there was news that renowned economist Raghuram Rajan has been appointed the RBI governor for the next 3 years, and Mr. D. Subbarao retires on the September of 2nd. Uh, Market on that particular day did not quite really like the news, and it was probably reading on the fact that Dr. Raghuram Rajan can probably mount on the pressure by the finance ministry and would be more pro-growth rather than protecting the rupee or controlling the highly stubborn retail inflation. However, after an interview with Raghuram Rajan after he was appointed the RBI governor, he made it clear that he'll be more pro-growth as has been in his case in all his academics and in all his academic career. He has been more pro-growth. However, he also may maintain the stance that low inflation and price stability will automatically achieve both good amount of GDP growth and also less amount of unemployment. Hence, the market did not on that day yesterday quite cheered up the news that one of the top economists in the world is to be sworn in as the next RBI governor. We expect Dr. Raghuram Rajan to initially take steps to firstly to stabilize the rupee and then probably to develop a very underdeveloped bond market in India so as to attract FII, FDI inflows in India to provide stability and some strength to the rupee. Next, he would be more pro-growth and would try to very carefully balance the growth inflation trade-off because India clearly is in a need of a big bazooka and that's really needed. However, it was being prevented in the last 2 years or so because of a very high consumer inflation rate. Uh, Many economists honestly believe that the FY14 growth could also breach the 5% barrier and we could see a 4% number in the GDP growth, which would really not be a very good sign of where India is heading after registering double digit growth just 3 and 4 years ago. And clearly, we believe that the whole emerging market slowdown thing, as well as the other stuff which has been affected tier emerging countries like China, Brazil, Russia, so on and so forth, have really been the very rapid growth in the last 5 or 6 years or so. And now all of those are probably coming to a sudden break. Talking about India, as I said, stubbornly high inflation, yawning current account deficit, with large fiscal deficit, and only talk and no real action on the policy reform is a big crisis that we face, and it will take a lot for Dr. Rajan to take us out of these crises. Speaking about earnings season, the Nifty companies have really reported in a very deep growth in this particular quarter with for more 12 to 14 companies here yet to report their results, and most of the companies are from really stressed sectors like metals and minings and infra and so on and so forth. So we really do not expect the Nifty EPS to from here on see a big increase. Rather, we have more laggards from this point in time. Then we have very good companies reporting results. So on that front, really, we haven't. I mean, I understand that it's usually a very weak quarter seasonally. However, the growth has been really deep as we expected. Uh, Tata Power was one such company was reported its result day before yesterday, and other companies like BHEL, L&T all missed the numbers by quite a bit, and the stocks have been hammered really badly. The trailing PE of the Nifty index is trading below 16.5 and is at very attractive levels compared to its historical levels. However, the de-rating of the Indian markets has been a cause of concern and has been justified in our view due to the factors mentioned like big current account deficits, stubbornly high retail inflation, uh, probably higher interest rates compared to the rest of the world, even in emerging markets. So we believe that the de-rating is fully justified in our view. However, with the longer term perspective, investors can take this as a good opportunity to probably enter and make some good investment in the market at current levels. There's also a certain bit of regulatory risk in some sectors like banks. Uh, we expect the banks, especially PSU banks, to continue to report higher NPS over the course of next 4 quarters or 6 quarters, and the asset quality is going to get worse from here rather than seeing an improvement. Also, with very less scope of interest rates coming down unless stubbornly high inflation keeps its track. We also expect the loan demand to be deepened from here on, not just hardly reaching double digits. So what's been happening in the Nifty index is most high beta names have been battered, and all those that have been doing well were IT and the banking sector. The banking sector, because of asset quality concerns, has now been battered in the last 2 weeks or so, and it's really some IT, mostly IT stocks and some FMCG stocks which have been really holding the market up. Otherwise, apart from that, if you take down a view below that, most half of the CNX 500 stocks are probably trading at 52-week low. Half of the NSE is trading at 15-week low, and many hundreds of stocks are trading below their 2008 lows, about 200 stocks or so. So clearly, the market rate is quite weak, and we also know that the Nifty index is not the entire reflection of the Indian economy. So clearly, things look bad. However, as I said again, we would again recreate our view to our investors to continue to invest in quality stocks, large cap and mid cap. Do not go bottom fishing. Avoid high beta names with stressed balance sheets as of now. Old stocks which have good balance sheet, good scope, and which are trading at a probably a lower valuation than 6 months before. So this would be a very opportunity for our long-term investors to buy into the market. The Indian market for the next 5 to 10 years has probably greater growth perspective if the Indian politicians do fall in place in respect to their reform talking that they have been doing. China has been gradually moving away from its investment-led growth and export-led growth to a more consumption-based economy. India is having demography on its side, but however, until the reforms kick in and we have a good system and we also fulfill our need for having a better infrastructure, we would continue to see such short-term shocks into the Indian economy. Also, we need to develop a great deal of foreign reserves and a more stable portfolio inflows to really protect and check the volatility in our currency and also uh, heat some breathing to the CAD, which has been growing ever since the last 2 to 3 years. Regarding inflation, many people believe, and we probably in part do agree with their view that the fiscal policy is a total mess in India in the current UPA 2 government. And I think anything BJP-led coalition in the next year elections, if they come to the center, which is highly unlikely, markets are going to cheer that. And we believe that in the last month or so, when the Nifty has really come down by almost 600 points, we believe that the market might probably be pricing in some of the tail risk event, which really is that elections would be announced anytime soon. So the market is really nervous as of now. And then on top of that, we again have the QE tapering, which would always haunt all emerging markets with high current account deficits. So clearly, the US yields have been rising. The US market has been registering all-time lows in the last trading 10 sessions, except the one for yesterday when it broke 1700 and went down. In terms of valuation and price to earnings, the S&P 500 is now higher than what it was in its 2007 2008 highs. So clearly, investors are pouring in their money back into the US from emerging markets. So unless we see a good amount of optimism from our politicians regarding reforms and really, just moving along with the projects, I think FIs will probably be getting more and more pessimistic of India. And once they start offloading Indian shares and start selling in the Indian markets, we can probably even reach the 5,000 levels. So clearly the tail risk is there, but however we believe at this point in time, it's pretty unlikely that it's going to happen in a rush. It, if it happens, it will obviously happen slowly and gradually, but we see a lower probability of that. Thanks very much.